In this video, I want to take a look at a bunch of different markets from a stage analysis perspective and show how stage analysis simplifies trading, because most of the time you are ignoring markets that either are not at an ideal buy point or are breaking down into a stage 4 bear market. To get more information on stage analysis, you can go to my stage analysis page at nextbigtrade.com. But to get into stage analysis, really the main idea is that the only time we should be interested in buying is when an asset class breaks out into a new stage 2 bull market. And the time to sell is when something breaks down into a stage 4 downtrend after it has already gone through its bull market phase and topping phase. And to get more information specifically on the stage 2 buying process, I have a more in-depth article, but basically we're looking for a breakout above the 30-week moving average on a big increase in volume, which helps confirm the buying pressure is pushing the market into a new bull market. And the second ideal buy point is the pullback to the 30-week moving average, which sets up a low risk buying opportunity where you can use the moving average as confirmation that the market is indeed trending higher. If it would break back below the moving average, that would confirm that this is a false breakout, and either the stage 1 basing phase would continue or the market would move back into a stage 4 downtrend. And that's a good point to discuss, is that not all stage 2 breakouts work. So even though we're focused on this ideal buy point, it's not a guarantee that when you see something like this happen that it's going to continue into a new bull market. But we can ignore all this other noise that's going on in markets until we get to the point where we might actually get a real stage 2 buy signal. Now, looking at different markets, like for example, the gold stocks broke out into a new stage 2 bull market back in February of this year, and recently got close to the retest of the 30-week moving average back last month, and then moved higher since then for the past month. And notice that the volume has been big in this gold stock ETF all year, which again is a sign that there's accumulation going on and buyers are overwhelming sellers, which is pushing the market into a bull market. And notice that this massive bull market opportunity was created by the stage 4 bear market in gold stocks that lasted multiple years. And then once a basing phase started, we did have multiple breakouts above the moving average that failed. So these are failed stage 2 breakouts that after they occurred, the bear market continued until we got this buy point early this year. But even though these breakouts failed, it didn't mean that we'd never have a bull market again in gold stocks. It only meant that it would probably occur at a later date. So when we finally got to this buy point here, the market was so destroyed, so beat down, and nobody was left in these stocks, that we've seen this absolutely massive run up that's occurred this year and taken everybody by surprise. But people that have been following stage analysis would have been interested in this trading opportunity back here and capitalized on it. Similarly with gold, we saw the breakout again in February, and then the ideal buy point retest last month, which is propelling this bull market forward once again. And I'm starting to see people talk about gold being overbought and too many people in the gold market now. But notice that if this is a new stage 2 bull market, it's still only about 5 months old. So in bull market terms, we're still in a very early bull market, and the structure of the market still is very much a stage 2 bull market. And even though we could be short-term overbought at any time when we get stretched above the moving average, once we pull back a little bit, it can always reset the market and give it the ability to continue trending higher until we do get that final, topping phase. You'll see a stage 3 topping process like we saw back in 2011, and ultimately another bear market phase. But we're nowhere near that in gold, so you can ignore people that are, get short-term bearish, especially in a, very new bull market. Now, touching on silver just quickly, once again, silver broke out later. It actually didn't occur until April. Pulled back to have a great retest of the moving average in early June, and once again, we're seeing a powerful breakout over the last month or so on a massive increase in volume. Notice we're doing 2 times average volume in 2 separate weeks over the past 5 or 6 weeks. So this is massive accumulation that's going on in this new bull market. Now here's where the process of using stage analysis is interesting, and what minimizes making bad decisions is because you can look at different markets and decide whether this market is in this ideal stage 2 buy point, or whether it's time to ignore the market because it's not exhibiting the signs that it could be breaking out into a new bull market. Now, this is the corn ETF, and corn tried to break out above the 30-week moving average back in June, but failed after initially breaking above the moving average. And notice how we've made a new low once again in corn, and notice how the volume didn't have a massive increase on the breakout, which is a bad sign for a real sustainable new stage 2 breakout. And notice that the market wasn't outperforming the S&P 500 either. So these are signs that this breakout would fail. And notice that we've had, quite a few failures over the years in corn, just like we had in the gold stocks. And this doesn't mean that corn will never again break out into a new uptrend phase, but it just means that the stage 4, kind of stage 1-ish basing process is still being, is still an ongoing process in corn, because this bear market just isn't going to end quite yet. But what you can do is put asset classes like this on your kind of longer term radar, because all markets are going to transition through these cycles. So at some point in the future, corn will be in a bull market phase. But the idea is that we want to wait for that to occur. So since corn has been in a bear market for 3 or 4 years now, or longer, we can put corn on our longer term watch list for a potential new bull market, but know that since we don't have that signal yet, we're not going to take any action quite yet. We'll just keep watching it and wait for it to develop into a new bull market. Now, coffee is a little bit different than corn, because coffee actually did break out above the 30-week moving average on a massive increase in volume, and we've seen a lot of big volume over the last few weeks, supporting this as a potential new real bull market and not a fake breakout. And I'm actually long the coffee ETF, just to note. But yeah, because the fact that we did have this massive increase on big volume, and we're still maintaining ourselves above the 30-week moving average, which means that we're still potentially on track for a new stage 2 uptrend. Now, looking back at the commodity ETF GCC, again, we just kind of like corn, we've got a breakout here, but we don't have volume confirmation, which means that it's possible that this breakout is a fake breakout, similar to what we saw back in 2014, where this could continue a stage 1 basing process for a while, or even a new downtrend before the real breakout into a new bull market. So once again, without volume confirmation, I would kind of wait to see if this confirms itself through price action into an uptrend, or whether this is going to turn into a failure. Now, the S&P 500 has been in this topping process with a couple fake breakdowns since the end of 2014, and there's a lot of bears out there that are calling for an imminent stage 4 decline, and then there's some bulls that are kind of remaining hopeful that this trading range is going to break out into another stage 2 phase. And honestly, this market would be better off to have a bear market to produce the conditions for another new bull market. But if that doesn't occur, it's possible this market could consolidate for a while longer before breaking out back into a stage 2 bull market. So this market could go either way. And really, from a stage analysis perspective, you want to kind of stay away from markets like this that are not trending and not at a new stage 2 buy point coming off of a bear market, because those are areas where sustainable bull markets are born. So for this really to get pushed back into a bull market, we'll need to see new market leadership take form, which would then propel the indexes back into a bull market. Until that happens, you really want to avoid stocks that are kind of just going to trade with the S&P 500. And the look at the London Financial Times Index. Again, we're seeing consolidation since the start of 2013 for this index, and again, consolidations like this can produce new bull markets, but a lot of times it just takes a lot of time for a sideways consolidation to produce a bull market versus a stage 4 bear market. And notice that we did get this, like 20% or so bear market from 2015 until now. So it's possible that we're starting to set up for an eventual stage 2 at some point here. But, like I said, with gold, we had such destruction that it was more likely that a stage 2 would be born off of that versus what's happening here. Now, looking at the financials, again, we see this topping process, and this is one of the weakest sectors in the stock market. So if any market is really going to break down into a stage 4 bear market and lead the markets lower, it is the financials. And notice how they're underperforming the S&P 500 as well. But if they do hold ground here and start trading above this moving average, then that gives more credence to the bulls, and that maybe the sideways consolidation does break out back into a bull market. And another thing to put on your radar longer term, once again, is some of these English banks, specifically Deutsche Bank here, has been in this stage 4 downtrend for over 2 years now. And again, from a stage analysis perspective, this is the last thing that you want to own at this point. But once this stock, if it does survive, it's possible Deutsche Bank goes bankrupt. But say it doesn't, gets down and trades into single digits basis for a little bit, then breaks out again, that would be a great stage 2, potential buy point to take advantage of a new bull market. So stocks like this, you never want to buy from a stage analysis perspective, because it's still in a stage 4 downtrend that could end in complete misery. But you can put these on your radar longer term for a potential new bull market.